Hi, this is Lara at Elliott Wave Stock Market with your weekly gold analysis done after New York has closed for Wednesday 14th of August. I'm recording this almost right at the end of Wednesday, 10 minutes to midnight New York time on Wednesday. There is a poll on my website at the moment. I'm trying to gauge the level of interest for daily gold analysis. So if you could click through the link underneath the video through to my website and answer a couple of quick questions, I'll have an idea of whether you want me to do this every day for you or not. Thank you. I'm going to have a quick recap of the monthly chart first. Just going back to motive wave, I've readjusted my wave count for gold at cycle and super cycle degree recently, just this piece up in here. When we look at gold on the monthly chart on an arithmetic scale, it has an exponential rise up here and it doesn't really look right. It looks like we should be viewing this on a semi-log scale, and when we do that, this looks more like a fourth wave correction than a second wave correction, although it has still clearly breached the channel. Either way, if it's no matter what degree it is, a fourth wave at cycle degree or a second wave at supercycle degree, which is now my alternate wave count and was previously my main, either way, within the correction we have a zigzag structure. This actually subdivides best on the daily chart as a 5, despite looking strongly like a 3. So we have a 5, 3, 5, and this structure of primary wave C down is still incomplete. We still need a final fifth wave down. If this is cycle wave 4, it can't move into cycle wave 1 price territory. I would not expect movement below 730.4 for gold. If that were to happen, then we would be certain that the downwards movement would probably be a super cycle degree, and it would be a second wave correction. It would probably be a lot longer lasting and go a lot deeper. So at the daily chart level, this is where primary wave C of the big zigzag begins, and from this high to this low, the wave count so far is not a complete impulse. We can't see a completed 5 easily from that high to that low, so the structure is incomplete. We have 1, 2, a long extended third wave, and an incomplete fourth wave. Intermediate wave 4 can't be over here because from this low to this high the structure subdivides as a 5-wave impulse and not a completed zigzag. So this is a double zigzag down for the B wave, pretty much most likely to be complete here, and we need now a 5-wave structure upwards to complete for the C wave. At 1441, minor wave C would reach equality in length with minor wave A, and I'd expect it to find resistance at the upper edge of the small channel drawn around intermediate wave 4. Draw it from the start of A to the end of B, place a copy on the end of A. When we have more structure within minor wave C, specifically when we know where minute waves 3 and 4 have ended, I can add to this target calculation at a second wave degree, and so towards the end it may widen to a small zone or it may change. Intermediate wave 4 may not move into intermediate wave 1 price territory. This wave count would be invalidated at primary degree with movement above 1672.77. And again, when I know where intermediate wave 4 has ended, I can add to the target calculation at primary degree at a second wave degree, intermediate wave degree. At 1151, primary wave C would reach 1.618, the length of primary wave A. When we know where the fourth wave has ended, this target again may widen to a small zone or it may change. So over the last week I was expecting upwards movement for gold. That's what we got. Let's have a look at what happened on the hourly chart, where the start of minus C down here is this point down here. From this low to this high we have a nice complete 5-wave impulse with some decent Fibonacci ratios in there. I shan't go over the ratios in the video. I'll try and keep it at a reasonable length for you. My only question with the hourly wave count today is the second wave correction over here as a single zigzag most likely, although we could see this as a double, that's also possible. What's an easier fit is seeing it as a single zigzag. It may not be over there though. If we move the degree of labelling here within minute wave 2 down 1 degree, this could be wave A of a flat for minute 2, from this low to this high so far, we only have a 3-wave structure up. This could be wave B over at this point right here, and wave C could take price lower, beyond the end of A to avoid a running flat, probably most likely for an expanded flat comfortably beyond the end of A. If this wave count is invalidated with movement below 1316.05, that's what's happening. The invalidation point has to move down here, and we need to see a completed 5-wave structure down for the C wave. I'm labelling it as complete though because it has a really good overall look and it has a good proportion, although it is a 39% correction, which is relatively shallow for a second wave. What we would need to see to confirm this hourly wave count would be one more little upwards push. If we see a new high above this point in the next few hours, you can have more confidence in this hourly wave count. If price moves below this point, expect we will see an invalidation and more downwards movement as a C wave unfolds. What's most likely is we're seeing minuet wave 1 within minute wave 3 almost complete. When we have a little 5th wave up, that should be it. We should see a second wave correction, which should find support at the lower edge of this channel on the hourly chart, and when that's done, expect an increase in upwards momentum for the middle of a 3rd wave. The short-term target may be reached towards the end of the week or shortly after. At 1431, minute wave 3 would reach 1.618, the length of minute wave 1. So I'm expecting overall, again, upwards movement for gold. Look out for an upcoming second wave correction, and when that's done, I am expecting an increase in upwards momentum for gold. That's all for me today with your gold analysis, and please remember to click through to the site and answer that quick poll for me. Thank you.